Hi, this is Ian Foster from BeAWinningTrader.com, and I am going to do my market analysis for the week commencing the 4th of December 2023. Yes, we're getting close to that time of the year, folk, that we are in the equity markets looking for our Christmas rally, so to speak. Maybe it's already started. Maybe there's an awful lot more to come. But anyway, we will talk about that later. Let me just begin with looking at some of the forex markets. I trade the euro dollar, I trade pound dollar, and the main market I trade is pound Japanese yen, and in relation to forex markets. And I'm very prone to trading light crude oil and the gold markets. Not as much gold, suppose, in comparison to light crude oil, and of course the equity markets. I've been recently concentrating on my Discord channel trading the DAX. So we'll look at these markets briefly, and we'll see what the probability of price movement and direction is for the new trading week. So I'm going to start off with pound dollar, and you can see here where we are now. This was a market that hasn't been very kind to me over this past week. And the reason I say that is because if you can see here last week, and I'm just going to zoom this in a little bit if I can. And that is, we have a outside weekly vertical bar, the most single powerful bar structure when it comes to price action. And that was a very bullish outside weekly vertical bar, indicating that we had a higher probability of taking that high out, or we still do, before we take the low out. So therefore, each retracement this week, technically speaking, on an interweek basis, I was looking to take long signals. And indeed, I did do that. And if we go to the daily chart, you can see that I've been trying to do that if we got the setup on the hourly chart or the 4-hour chart. But on each occasion, it would attempt to go up, and then it would retrace. And you can see even on Thursday, and this is now to the daily chart on the pound yen, we had again an outside daily vertical bar to the upside. So I says, right, Friday's not my most favorite trading day, but it's a day that this maybe perhaps is going to make its move up. And lo and behold, what did it do? It completely reversed. We've now got what you call a railroad track. What do I mean by a railroad track? Well, you have one bar indicating one direction and another bar of similar length with a close in the opposite direction. So it's just like a railroad track. And this is a bearish scenario. Now, that does not negate the fact in the pound yen, from my perspective, that we still have this outside weekly vertical bar, and the high of that needs to be the price objective of that bar is the high to be broken to the upside. And the only time that that bullish outside vertical bar fails is when the low of that bar, which is a low of 184.46, is when it is broken to the downside. So again, I will be taking a stronger bias. I would love to be on a long trade and get follow through, something that we haven't had. I'm going to be careful, folk. Yes, I've been controlling my stops. There's no question about that. But I have to honestly say to you that it was certainly not a good week in the pound yen for me. If I go to the euro dollar and we look at the euro dollar, and again, I'm going to start off with the weekly chart. And what we have in the weekly chart in the euro dollar here again is an outside weekly bearish vertical bar. You see this here, it's made a higher high than the previous week and a lower low, and it closed closer to the low than it did the high, which is indicating that this market should take that low out to the downside first. And because it broke through these lows here, if I just mark them up, that was what we call a confirmed vertical bar trading pattern, higher low. It broke through that down here. And now the retracement technically means that to get a confirmation of that trend change, we need a lower high than this high. And this could be the start of it. Now, we did get a bullish bar close on Friday. That would indicate to me for the beginning of the trading week, and certainly the beginning of trading on Monday, that there's a greater probability of this market going upwards initially. But I will be using any strength in this market. I will be certainly using it to try and identify lower interweek highs from for me to be able to take short trades. Now, the pound dollar is completely certainly more bullish, I should say, than the pound yen, because look what we have got. We have an attempt to go down here on the daily chart on Thursday, and we've got a railroad track now to the opposite to the pound yen. We've got a bullish bar on Friday, a bearish bar on Thursday, and you can see the close is bearish. The close here is bullish, and therefore the pound yen, or the pound dollar rather, a cable is bullish. And again, you can see this retracement here as it broke through a previous significant confirmed higher low. And I think there's going to be a bit more mileage to the upside in this market, just simply because of our price action on Friday. But again, technically speaking now, because we've changed trend here, this market should technically make a lower high than the high up here. Okay, that's where it should do. But again, there's plenty of movement from 127.11 up to the highs of almost 131, or maybe just above 131. In fact, yeah, 131.42. So there's plenty of pips and points there to be had. So again, just in relation to concluding on those three currencies, I'm looking on the euro dollar to sell the rallies. I'm looking on the pound dollar to, in other words, cable, as we're looking at here. Any retracements in that, I think I would be looking to buy cable initially, but I'm not just overly confident it's going to go up to the previous highs. Technically speaking, as I've said, it shouldn't, but still there should be enough in it from which it should head north to give us some nice profits. And the pound yen, as I've said, because of this bullish outside weekly vertical bar from last week, in other words, Friday week past, it's telling me that technically speaking, I am looking to take higher lows for long trades to achieve the price action objective of that OVB. And let me just stress that an outside vertical bar has got about an 82% probability of it actually achieving its objectives. So those objectives, just to repeat myself, are bullish objectives. So there is an 18% probability the market could retrace. So I can see initial retracement because of Friday's price action. Certainly can see initial retracement. How much lower? That's a higher high than this high. That's a higher low than any low down here. So technically speaking, it should not go anywhere near this 184.40. Any retracement below the low of Friday, I would be then watching closely on an intraday basis to see, can I get a higher low from which I can take buy signals and hopefully get a more positive return, a trading return on the pound yen for the next week commencing on Monday in comparison to the week that is just closed. So let's take a look now at the indices, and again we can start at the US Dow. And what a rally has been ensuing in this. You can see here there's a little bit of consolidation a couple of weeks ago at around 34 dead, and it's now up at 36. It's 2,500 points more. And also the S&P 500. Now it's coming up to a previous resistance line here, the S&P 500. And I do believe that there's going to be some sort of a stalling around those levels up here at the 4606 level. Okay, and we closed at 4506. So I think that we're sort of we're coming up to levels there that perhaps is going to show some resistance on that again. It's like a block of ice. The more often you hit that particular spot, which in this instance is a previous high, the weaker that becomes. But again, I think there's going to be initial resistance up there. And simply because the market has done quite a lot on the weekly chart, you can see the daily chart been consolidating up here, and there's further movement up there. If I just move my horizontal line up to there. So there is, maybe a little bit of movement. You could see maybe the market initially going up at the beginning, early part of the weekend, maybe Monday, and maybe starting to have a little bit of retracement. But it's went from down here at underneath around 4100 level up to the 4600 level, and it would only be natural for a retracement, because if that market hasn't made a retracement, it's a bit like climbing a tree, and the branches at the very top of that tree get very weak, folk. Okay, and it can break at any time. So if it does make a retracement again, I would be looking probably to use that. Certainly, if we get a confirmed higher low, for that market to break up through this previous resistance at 4606, and of course the Dow is backing that up. So it is also, and as I said to you, the DAX is another market that I look at. And if we go on to the DAX here, you can see in the monthly chart I've up here, this looks like breaking up through these previous highs without question of doubt. And even the weekly chart, a very bullish weekly bar there. And we closed on Friday just at the very high of that range. That would indicate to me that there probably will be an initial retracement. It takes very little price action to achieve those objectives. And for, again, that market probably to show some resistance up to these previous highs up here. And again, if I flick on the daily chart, you can see, look at the price movement. Thursday was quite a small range day, and when you get a small volatility, low range day, you can be rest assured that they're only gathering strength, either for the market to continue as it did in this example, in the previous direction, or it preparing to change trend direction. But you can see everything looks very, very strong here. But nothing rallies forever, folk. Nothing falls forever. And on that understanding, I think it's quite possible that we're going to get some sort of a retracement, certainly in the initial part of the week. But again, is it going to be a higher low for us to go into this real Christmas rally mode? Everything looks pretty good on the horizon out there in relation to the interest rate cycle, etc., etc. And earnings have been probably better than certainly as good as expected for most of the companies that have just been announced. So of course we've got a bit of clear air coming into the holiday period. So we have now we're a few weeks away from that yet, but I still think there's room for strength. But initially, I think some resistance. So again, looking at the indices, my initial reaction will be a little bit cautious, because we're coming up to resistance levels, and I would like to see not necessarily tick sell signals, so I could be staying out of the market, but I would like to be seeing that resistance level come back to give this market greater foundation from which then during this coming week to give me higher lows, and for that market then to continue on the upward cycle that it's presently on. Again, let's see how deep these retracements are, if they do come. But if providing they're a shallow retracement, certainly it's only an opportunity from which to go long. Now, let's take a look at gold, which has been a very crazy market on the bullish side recently. And again, we're now up, if we go to the gold here, if I can just move some of my text out of the way, and you can see here that we're coming at 1, 2, 3, 4. We've hit this. Like, remember the little hammer in the block of ice? The more often you hit it, it's going to break through it. And we have got just a very bullish, positive price action movement on the monthly. On the weekly, we've had a very bullish weekly bar in gold. And again, it's too strong for me to go into now. I have been doing a little bit of trading in gold, but from a perspective of looking for a longer term trade at the minute, I would want to see a retracement, and that's what I'll be waiting on. Again, you can see the price action movement. We had a bearish daily bar on Thursday, which would only been healthy for the market, and now we've got this very bullish bar on Friday. And this very bullish bar, I would like to see the high being taken out in gold in the early part of the trading week, and then perhaps for that gold market to retrace. And I may use that if I get a lower intraday or an interweek high as an opportunity for going short gold. Yes, it's a counter trend trade. But remember, because the gold has non-stop moved on the way up here, folks, it's only natural for it to take a retracement, but it's certainly very, very strong. So again, to analyze gold, I will be just watching the highs, the previous daily bar and weekly highs, and hoping that they're retraced, that they're taken out. I mean, our price action objectives have been achieved, which means the highs of last week and the highs of Friday should be broken to the upside, and then perhaps seeing, only if I get a lower high, would I take a short signal. But if I do get that, then seeing that is formed correctly with a lowish risk, and I would look to go short that for some sort of retracement. How much movement there would be in that, because it is a counter trend trade, I do not know. But as a trader, and being prepared to be in and out, obviously not in and out like a yo-yo, but in and out maybe over a period of a day or two, then I think there's certainly enough movement for gold to give something back. And if it is going to continue higher, then to form a higher foundation, in other words, a higher low like the low that it formed down here. The last market we look at is crude oil. And crude oil, again, is a market that has been kind to me, folk. As I've said previously, I haven't done any trading. I didn't do one trade in crude oil just in this past week, which is quite strange, and don't ask me why. But I certainly see that we had an outside weekly vertical bar in crude oil, daily vertical bar in crude oil on Thursday, and we had that continuation with the rally on Friday. So remember, this rally within Thursday's price action was only an opportunity from which to sell crude oil. But I think I was too much engrossed myself in trading the pound yen that I didn't get onto the crude oil market. So I didn't. So again, we've got the weekly bar on crude oil, which is a very weekly bearish bar on crude oil, and we were not able to take this high out. Now, I wish we had have taken that high out, because although that there was a lower low and a lower high, the close in this weekly bar of 2 weeks past, that's last week, the week before, 3 weeks past, I should say, was actually slightly to the upside. So again, it would have been much clearer for me and give me much more confidence if this market had done this after taking that high out. And because it's still trading within inside that, technically speaking, bullish bar or 50-50 bar, in other words, it's undecided after all this bearishness, then I would be certainly more content to be going short. But again, there's opportunities there, and we've got red bars when we put into the 60-minute chart. You can see this is my software. The pin, the price bar is blue as a sign of strength, green for neutrality, and then red when there's more selling pressure than buying pressure. And you can see that that's adding up between the daily bearish bars and the weekly bars, and then you've got the 1 hour bars, all giving weak and sell signals. So again, to conclude with gold, I will be trading. It's one of those that I will certainly be trading what I see. Can't look at the weekly bar that much because of that scenario of 2 weeks past that I've already explained in here. But I will certainly be looking at these highs and these lows, and I will certainly be expecting the low of that inside bar at 73.85 to be broken to the downside, which again, it hasn't much to do. It's at 74.42 close. I'll be expecting that to happen. And if you're watching this and you're getting different price figures, if you're looking at some of the futures markets, I very much guarantee you that the patterns are exactly the same. So we're looking to take the lows of that out. And then I will be seeing where that market goes. Will it go down to that 72.44 level, or will it bounce off that and head back up again? But my inclination for gold would be certainly to sell any retracements at this minute, just because I've got a weekly and certainly a daily bearish bar. And again, there's room down there at 72.44. The market's at 74.42, 200-point move. If I got a half of that, I would be quite content. That is my analysis, everybody, for the week commencing the 4th of December. It's Ian at Be a Winning Trader. If you would like to email me and learn how I trade the markets and use my education and software program that I've developed proprietary to myself. Again, remember, I've been educating for 25 years. And yes, sometimes trading can be more difficult than others, but we don't want to make it any more difficult. So remember the secret to trading. Number one, have a methodology. Number two, control your risk, because let me tell you, at times, trading will not go as anticipated and as per the analysis that you do. But as long as you know where you're wrong, as long as you know that you're not over trading and not taking on too large a position, folk, keep those shallow holes when you are wrong. Make sure that they're shallow. Don't let them get deep. And then once the market starts going for you again, you'll be able to fill them in and move your 3 steps forward. And that is what the secret to trading is. So it's Ian at Be a Winning Trader. On the description below this video, you will see a link to my Discord channel, where I give my signals live trading the pound yen and the DAX. And it is free for 14 days, and then it is £99 per month. So we've been very, very successful. Last week wasn't so good. No, I have to say that. Excuse me. But generally, we are up an awful lot. We're over 1,000 pips since the middle of August, okay, when the service went live. Thank you for your time. Remember, Ian at Be a Winning Trader if you would like to speak with me. Thank you.